This entire Bitcoin rally was built on a system that is now breaking. That river of institutional money is not just drying up, it's starting to flow backward. And if you don't understand what that means, you're not just at risk of losing gains. You're walking into an ambush where the exit vanishes before you even know you need one. In this video, I'll show you the data that proves it. We're not looking at charts, we're looking at the system's plumbing. And right now, that plumbing is flashing red. Here's the core problem. This entire bull run wasn't built on fundamentals. It was built on one story: the US spot Bitcoin ETFs, a fire hose of institutional capital, relentless one way demand. It soaked up billions and built a floor under the price. Every dip was bought instantly. That market is over. The fire hose hasn't just slowed down, it's reversed. We see some positive days, but that's not the trend. The trend is a major slowdown, with recent periods showing net outflows from these Bitcoin products. This is the single most important shift. The market's biggest buyer just walked away. Price tells you what happened yesterday. Flow tells you what happens tomorrow. In simple terms, the floor is gone. This makes the market fragile. Without that constant institutional bid, the price is exposed. It's vulnerable to liquidation cascades, a vacuum on the buy side. When that happens, the price doesn't drift, it falls through thin air. I need you to understand what no buyers really means. It's not a slow drift down. That is not how these markets work. Imagine the price is a high diver. Market liquidity is the water in the pool. When the pool is deep with buyers, the diver jumps, and the water absorbs the impact. But right now, that water is dangerously low. The buy side isn't just weak, it's thin. So what happens when a big seller arrives or panic sets in? It's not a splash, it's a splat. The first sellers get out near the top, but the flood of selling instantly overwhelms the few buyers left. The price doesn't just fall, it crashes through empty levels, creating a vacuum. Liquidity doesn't just get low, it vanishes, all at once. By the time most people realize the water is gone, they're already in free fall. And in that moment, there is no second chance to exit. This is the classic narrow exit. When the price is high, the exit looks wide open. But in a panic, everyone rushes for the same tiny door. So the institutional floor is gone. The liquidity pool is shallow. What does this mean for your money? It means the market isn't just risky. It's perfectly set for a classic bull trap. But here's the part that almost everyone is missing. This market looked strong, but it was held up by two pillars: relentless ETF buying and deep liquidity. Both are now disappearing. Here's how the trap works. First, a sharp price bounce. We just saw one. It wiped out hundreds of millions in shorts and created powerful FOMO. Second, you see massive long-term price targets. These numbers don't just suggest growth, they paint a picture of a supercycle, making today's price feel like a huge discount. This is the trap. A sharp recovery plus a bullish promise. It makes buying feel not just safe, but urgent. Remember, a trap isn't just a falling price, it's a rising price that runs out of fuel. Healthy rallies don't need this much persuasion. After weeks of extreme fear, sentiment is balancing out. That shift feels like a green light, not a warning. It's the moment you convince yourself the worst is over. But this feeling is not backed by the flow of capital. It's a market running on fumes. On top of vanishing institutions and thin liquidity, a critical pressure is building under the surface. It's a clear pattern of selling from the one group you need to watch. On-chain data shows that short-term holders, the speculative capital that chases trends, are exiting en masse. Their total holdings have just collapsed to a multi-year low. But here's the crucial detail. They are no longer selling for profit. For the first time in this rally, they are consistently selling at a loss. This isn't profit-taking, this is a vote of no confidence. It's the speculative money that drove this rally now running for the exits, even if it means taking a hit. They are adding supply to a market that already has a severe demand problem, creating the perfect setup for a trap. So how do you navigate this? You must separate your strategy by your time horizon, because the signals for a trader are the exact opposite of the signals for an investor. The short-term picture screams danger. The upside is capped. The downside is a catastrophic, fast-moving drop. So, what am I doing? I am not chasing this pump. Chasing price into thinning liquidity is a rookie mistake. Your job isn't to chase the last 10% of a rally. It's to protect your capital from a 30% drop. A firm break below support is your signal. That is not a dip to buy. That's the floor giving way. That is the cascade beginning. For those with a multi-year horizon, this entire situation is flipped. This volatility isn't risk. It's your opportunity. The fundamental case for Bitcoin is unchanged. Fixed supply. Global adoption is still early. The narrative of Bitcoin as a hedge against currency debasement is getting stronger, not weaker. The trader's trap is the accumulator's discount. This is the time for patient dollar cost averaging. Because these low liquidity cycles are where patient investors acquire assets from impatient traders. You're not positioning for next week. You are positioning for the next decade. So for the handful of you who watch the data, not the drama, what's your move? Are you buying, holding, or accumulating? Tell me your data-driven strategy in the comments. I read every single one. And if you value this kind of no-hype analysis, subscribe and hit the bell so you don't miss the next report. Now, while everyone else is glued to the price, here are the 3 under-the-hood signals you should be watching instead. Spot ETF net flows. This isn't noise, it's the heartbeat of institutional demand. We need a sustained return of strong, positive inflows. That's the signal the floor is being rebuilt. On-chain capital inflows. Forget paper gains. Is new money actually entering the system? A rising realized cap is your proof. It means conviction is growing. Key price levels. Price is the final verdict. For bulls, a break and hold above major resistance proves sellers are exhausted. For bears, a clean break below support is the final confirmation the trap is springing. So, should you buy Bitcoin right now? The answer depends entirely on who you are. For the short-term trader, the data points to a trap. Vanishing ETF inflows and razor-thin liquidity create a low-reward, high-risk gamble. But for the long-term investor, this danger is an opportunity. The structural bull case remains intact. This volatility is your chance to build a position at a discount. The most important thing is to know which game you are playing. Stop watching the ticker. Price is a story. Liquidity is reality.